In the next few minutes, I'm going to show you how candlesticks actually reveal the battle between buyers and sellers. Professional traders don't see candles as shapes, they see them as psychology. And once you understand this, you'll never look at a chart the same way again. Every candlestick secretly contains four prices. But the real secret isn't those four prices, it's the story hidden in the shadows. Have you ever looked at a trading chart and seen hundreds of little red and green candles? At first, they look like random shapes. But what if I told you something astonishing? Those candles are not just shapes, they are actually a language that tells the story of fear, greed, hope, panic, confidence, and deception happening in real time. Every single candle is a battle between buyers and sellers. And today, I'm going to explain candlesticks so clearly that by the end of this video, you will see charts the way professional traders do, even if you've never traded before. Let's imagine something simple. You and your friends are trading toys. Someone says, I'll sell this toy for $10. Another kid says, I'll buy it for 11. Another says, I'll buy it for 12. Now suddenly someone panics and says, I'll sell it for 9. During the whole argument, the toy price keeps changing. 10, 11, 12, 9, 13, 11. Now imagine we take all of that argument and summarize it in one little picture. That picture is a candlestick. Every candlestick secretly records four important prices. Think of it like a tiny diary. Inside every candle are four numbers: open, high, low, close. Let's translate that. Open. This is the price where the fight started. High. This is the highest price buyers managed to push to. Low. This is the lowest price sellers managed to push to. Close. This is the price where the fight ended. So one candle tells us where the fight began, how high the buyers pushed, how low the sellers pushed, and who won at the end. Now, here's the fun part. If buyers win the fight, the candle turns green. That means the closing price is higher than where the fight started. But if sellers win, the candle turns red. That means the closing price is lower than the opening price. So every candle is basically asking one simple question: who won the battle, buyers or sellers? Now let's look at the candle itself. A candlestick has two main parts: the body and the wicks. The body is the thick part in the middle. This shows the distance between the open and the close. But the thin lines above and below, those are called wicks or shadows. They show how far price explode during the fight. Think of them like price trying different directions before deciding where to settle. Here's something most beginners never realize. Long wicks tell a story. Imagine buyers push price way up, but suddenly sellers appear and push it back down. The candle closes lower. What does that mean? It means buyers tried but failed. That is called rejection. The market literally rejected higher prices. Professional traders love these clues because they reveal where big money stepped in. Candlesticks are not about shapes, they are about human psychology: fear, greed, impatience, confidence. Every candle is millions of decisions compressed into a tiny visual story. For example, a huge green candle often means buyers became extremely confident. But sometimes that confidence becomes overconfidence. And when that happens, smart traders start selling into that excitement. That's why the market often moves opposite to what beginners expect. Here is something fascinating. Even though markets are filled with millions of people, human psychology never changes. Fear in 1920 is the same fear in 2024. Greed in the stock market is the same greed in cryptocurrency. Because human emotions repeat, candlestick patterns repeat too. This is why traders study patterns like doji, hammer, engulfing candles, shooting stars. Not because the shapes are magical, but because they represent predictable human behavior. Here is the biggest secret. A single candle means almost nothing. Professional traders don't look at one candle, they look at context. Where did the candle form? At support? At resistance? After a strong trend? After a long consolidation? Candles only become powerful when you understand the story around them. That's when charts start speaking. Professional traders read candlesticks like detectives. They ask questions like: who is trapped here? Who just lost money? Where did institutions likely buy? Where did panic occur? Candlesticks are not about predicting the future, they are about reading what just happened. And when you understand what just happened, you gain an edge in predicting what might happen next. If you enjoyed this explanation, in the next video, we'll reveal something even more fascinating: market structure, and how professionals use that to their advantage. Because once you understand that, you stop following the market and you start reading. Thank you so much for watching this video. I really appreciate you taking the time to be here. If you found this video helpful, interesting, or even just a little entertaining, make sure to hit the like button. It really helps the channel grow. I'd also love to hear your thoughts, so drop a comment below and let me know what you think or what you'd like to see in the next video. And if you're new here, don't forget to subscribe to the channel and turn on the notification bell so you never miss an upcoming video. Thanks again for watching, and I'll see you in the next one.